Hey everybody, Economic Ninja here. I hope you're doing good. We're going to be talking about U.S. factory orders. Numbers just came out. They tumbled and in February caused the biggest drop since April of the 2020 lockdown collapse. Okay, now this is very, very big. It's very important because as we take in this data on a daily, weekly, monthly, quarterly basis, it's very important to understand that this is how collapse looks. All right, there's a lot of people, YouTubers, talking about recessions on the we're on the verge of recession. We're on the verge of recession. I want you to understand we are there now. Recession is measured in the past. You come up with your data. You look at your data and you say, oh, we've got a 2-3 months of negative earnings or lower earnings. I'm completely blanking out. Sorry, I worked super late last night. I want to get this out to you right away. But my point being is that recession, depression, all those things are measured based off of past analytics, okay? And so why it's very important to look at every data point as it happens, right? Because there's seasonal adjustments, weather can affect numbers, earnings, moods, social behavior, things like that. So there's tiny little nuances, tiny changes in market swings. I get that, but if you look at the large picture on a daily, weekly, monthly basis, you can see the collapse as it's happening in real time. Okay, so here's a couple numbers. So after 9 months of, and I'm going to link this article below. After 9 months of gains, U.S. factory orders were expected to fall about 0.6% month over month in February. Okay, the final print actually dropped 0.5% month over month, so slightly better than expected, but still significant in its decline from the upwardly revised 1.5% jump in January. So if you think about it, so we had a positive 1.5% jump in January, but then it only jumped 0.5% month over month in February. So what that represents, so now a lot of people, first let me explain to one thing. The way it'll be spun is we're still positive. Things are good. We're positive. We're not negative, right? What that represents is the largest month over month drop since April of 2020 during the big panic. While everything was getting shut down, manufacturing went from X, let's say, to X minus 2, and I'm just throwing out numbers. I'm really bad at algebra. Because everything stopped, right? So companies could not get their goods and services out. And I'm going to go back into it. And the 12.6 year-over-year rise is the weakest since February of 2020. Okay, so we're starting to see massive declines. It said the final print for February's durable goods orders came in at negative 2.1% month over month versus a preliminary drop of 2.2%. So this is what I think is very important about this. We're not in negative, or we haven't hit zero. I mean, you can't get negative. Companies are going to sell goods, and the people are like, I just want to take it all back. Point being is this: things are dropping fast. The economy is starting to freak out. Inflation is getting to be so thick, so heavy in everybody's eyes. People are contracting their spending, and that ripple effect now is moving into the companies that are producing the goods. Okay, it's one thing for the stores to report lesser earnings because people are not buying everything that they used to supply on the shelves. They're just buying things that are necessities. But it's another thing now to move into the pocketbooks of the manufacturers. The reason why this is a big deal is because if this goes on a couple more months, which in my personal opinion, not professional opinion, it's going to accelerate. It means that companies need to start thinking about laying off people. They'll start with the low-hanging fruit being seasonal employees, which right now there really isn't. There's companies are having a hard enough time finding employees. However, you could be trying to get employees to ramp up production. It's another thing to have to lay off people because you aren't able to neither ramp up production nor sustain the sales that you normally would, if that makes sense. So what do I believe this is going? I believe that we are going to see this narrative keep coming out month over month for the next 3 months, and it is going to send companies reeling. I believe as this data keeps hitting Wall Street, I believe it's going to send investors reeling. And couple that with not only the inflation crisis, but also the Federal Reserve's trying to raise their rates, and I think you are going to lead to something very bad. I believe that by this fall, most people will wake up and start to understand what is going on in the markets, that the markets just can't recover. They definitely cannot take the interest rate hike. However, you have yourself in an interesting, let's say, conundrum. You have to raise rates to be able to try and quell inflation, even though we know that the Federal Reserve is not going to, it's going to be too little too late. But you also have this issue with debt, and we are living on debt. We are on the financial lifeline right now. And if you pull that away by adding interest rates, then you start to take down the markets. And this is going to be, honestly, the most exciting time to be an investor, because volatility is what makes money. Quite simple. That's when you make your money, is when volatility is high, because your swings are larger. But I think that right now the biggest thing people can do is start to store up food, because I think that what we're going to do is, as food gets more and more expensive and shortages get larger and larger, people are going to start to panic buy and hoard, and it is going to slam that food supply chain to, you know, a halt. And we know that throughout history, uprisings start when food goes up to about 40% of a normal average household budget. And what we just saw in Germany, Germany's raising all of their food prices anywhere between 20 and 50%. I believe that starts today. And I'll try and find that article as well and link it below. It's going to get very, very serious. And I believe, and especially in a time where the weather is warming up and people can start to riot and start to loot even more. And I think it's important to think about food right now and security. And not because something's going to happen tomorrow or next month. I want you guys looking into the late summer and fall. That is where I believe you're going to see the buildup of this, or the crescendo of the market starting to really obviously tell you the truth. I think these are very serious times, even though many people would laugh and say, you're blowing this out of proportion, Ninja, everything's good. We're just sort of ramping up right now. And what they don't see is that it's like construction's a lagging indicator of real estate market strength. Right now, what you're seeing, to be honest with you, is there's nothing like it in history. Quite frankly, this is the most exciting time to be alive. I know it's going to get scary, but the truth is, because you're sitting here, you understand these times are changing, and they're not changing in the direction that most people think. You're going to watch this collapse in real time, and you are going to be able to take advantage. And that is the most important part. The elite of the world have always taken advantage of hard times. Crisis to them is the exact same word as opportunity. I know you're going to be thinking, what country uses that definition together? Put it in the comments section. All right, guys, that being said, I hope you got something out of this. The Economic Ninja is out.